Hello, everyone, and welcome to the program Business Point here on Global Television. I am Samuel Odi. Many thanks for joining on today's edition of the program. We have so much to talk about today in the world of business as the World Bank and IMF are having the annual general meeting in Washington, D.C. We're bringing you updates on that, and there'll be a whole lot of press conferences today where IMF will be launching World Economic Outlook. That will be happening later today. Also, UK is having concerns around unemployment. Also, the inflation in Germany has also gone up to a certain percentage, and locally here, we're looking, and research have shown that Nigerians' inflation is set to drop based on the fact that we've witnessed for the past 6 months, we've witnessed a certain stability within the financial sector and also energy sector. We'll also have that conversation, and also based on the fact that the harvest season is here, we'll look at what food inflation is, but that is a major stubborn sector in Nigeria based on the fact that food is a daily commodity. We're going to have that conversation on today's edition of Business Point. So let's start from IMF quickly, as IMF set to launch World Economic Outlook today. The International Monetary Fund, IMF, will unveil its latest World Economic Outlook later today, which is the 14th of October 2025 in Washington, D.C. During a hybrid press briefing at the annual meeting of the World Bank, IMF in Washington, USA, the report will present the IMF's update assessment of global economic development and prospects, providing key insights into the state of the world economy and growth projection for individual regions and countries. The press briefing will feature Priya Oliver, Economic Counselor and Director of Research Department, Peter Kov Brooks, Deputy Director of Research Department, and Dennis Ingen, Division Chief Research Department, will feature in this press briefing. Also scheduled for release today is the Global Financial Stability Report, GFSR. The GFSR assessment assesses key risks and vulnerability affecting the international financial system and offers policy recommendation aimed at strengthening global financial resilience. The hybrid briefing for the GFSR will also take place at the IMF headquarters in Washington, D.C. later today. In addition, the IMF will hold a press conference on the facial monitor on Wednesday. That will be happening tomorrow. The facial monitor evaluates the global facial development and public finance strategy, providing insight into facial stability across economies. The section will be led by Vector Gaspar, Director of Facial Affairs Department, Era Dalabla Norris, Deputy Director of Facial Affairs Department, and David Forisi, Division Chief, Facial Affairs Department. Annexed with the country-specific facial data will be released at the start of the press conference. Meanwhile, the Intergovernmental Group of 24 on International Monetary Affairs and Development, G24, will hold its press conference later today still at the headquarters in Washington, D.C. The G24 serves as a platform for developing countries to coordinate their position on international monetary and development finance issues. This year's G20 ministers, central bank governors, and deputies will focus on the theme's structural transformation policies for unlocking growth and potential. A formal communique will be issued immediately before press conference outlining the G24's position on key global economic and financial matters. In addition, the main theme for the communique will cover global economic condition, macroeconomic and financial stability, international liquidity and financing, debt sustainability, climate finance, international tax cooperation, the global trading system, and the role of multilateral development banks in supporting the sustainable development goals. It will also address ongoing decisions on IMF quota and governance reform, as well as the World Bank's evaluation roadmap. The G20 membership includes countries from Africa, Latin America, and Caribbean, and Asia as well. African members include Algeria, Cote d'Ivoire, Egypt, Ethiopia, Gabon, Ghana, Kenya, Morocco, Nigeria, South Africa, and the Democratic Republic of Congo. From the Latin American and the Caribbean members include Argentina, Brazil, Colombia, Ecuador, Haiti, Guatemala, Mexico, Peru, Trinidad and Tobago, as well as Venezuela. Members from Asia include India, Iran, Lebanon, Pakistan, Philippines, Sri Lanka, and Syria, while China will participate as a special invitee. Wow, so looking at this now, a whole lot is set to happen to go down from today and tomorrow in the annual meeting going on at the international in Washington, D.C., where IMF and World Bank are having the annual general meeting, looking at regions, at economic regions and countries' economic development in the past calendar year. So we'll see how all of this will be, and then our tools. We're keeping tabs and watching closely on how Nigeria has done in the eye of the World Bank and IMF generally. So moving on now, let's talk Commonwealth as Nigeria pushes for $2 trillion trade at IMF World Bank meeting, which is currently ongoing. Nigeria has joined other Commonwealth nations in a push to unlock a $2 trillion trade agenda aimed at deepening economic ties, strengthening resilience, and fostering sustainable growth across member countries. This was contained in a statement signed by Director of Information and Public Relations, Federal Ministry of Finance, Mohammed Maga Fasia. Later, he made this known. According to the statement, the initiative was a key highlight at a high-level meeting of Commonwealth finance ministers held on the sidelines of the World Bank and International Monetary Fund annual meeting in Washington, D.C. According to the Commonwealth Secretary, intra-Commonwealth trade is on average 21% cheaper than trade with non-member countries, largely due to shared language, legal system, and institutional framework that reduces transactions cost. The Secretariat projects the trade among members nations could grow to $2 trillion by 2030, provided the right investments are made in connectivity, trade fluctuations, and innovations would see to the achievement of this. Nigeria's Minister of State for Finance, Dr. Doris Uzoka Anyete, speaking during the discussion, emphasized Nigeria's commitment to supporting the Commonwealth development agenda and called for increased funding to accelerate progress towards poverty reduction, job creation, and sustainable economic transformation. Now, there are certain things that need to be looked into which Nigerians are paying attention to in situations like this. In June, the Commonwealth Secretary General, Honorable Sherry Ayoko Bonchwe, during her remark at the Commonwealth Trade Ministers meeting in Windhoek, Namibia, reaffirmed that the organization's core agenda is to unlock the full potential of Commonwealth trade and investment with the strategic goal to increase intra-Commonwealth trade to $2 trillion by 2030. And looking at this now, this is in line with the conversation that President has been having, that's talking about President Bola Ahmed Tinubu, based on what he said. He said he's looking to get Nigerians' GDP to 1 trillion naira by 2030. Now, if right investment, according to the minister, if right investments are being done and monies are being invested in the actual places that they are meant to be invested in, that is talking about SMEs and grassroots and production, and also exporting of what we produce and also produce what we eat. That is what will be able to help Nigeria achieve that 1 trillion naira GDP by 2030 if everything is being done. Now, looking at investment like this now, Commonwealth investments ranging around $2 trillion, that would help Nigeria also in achieving its goal of having a 1 trillion GDP by 2030. So now, all of these conversations now and all of this projection now is still in view based on the fact that this meeting is going to give a blueprint of what Nigerian economy is looking like. If you remember earlier this year, in around January, the IMF and World Bank says President Bola Ahmed Tinubu's policies are looking very good and is going to yield results. And we're beginning to see a certain level of stability within our financial sector. And also, dollar has been stable at around 1,500. So when we're looking at all of these trajectories now, it looks and it's seeming that Nigeria is heading towards what Mr. President projected and what he promised Nigerians by 2030, having a 1 trillion naira GDP economy by 2030. So now, another big question is being asked by Nigerians. What if he doesn't win the next election? What then happens? Will the next incumbents continue with the trajectory of making sure that these policies are working properly? We will find out that in the next couple of months and years, and then we'll know what would happen if that trajectory will continue and if it's feasible, if it's not going to be for Nigerians, market women, and individuals, won't be suffering, to make sure that the government wouldn't let the citizens of the country suffer so as to achieve its goal. So we'll see how all of this pan out. So moving on now, exciting news. Research has shown that Nigeria's inflation is set to ease further from the month of September as we await the current realities of Nigerian inflation, which will be coming to us in the next couple of days. Now, this research has shown that traders displayed their staple food in the market. Nigeria's inflation rate is expected to maintain its downward turn in September 2025 as analysts point to a stronger naira, improved food supply and sustainable energy costs as key drivers of continued price moderation. However, experts caution that while the trend remains positive, inflationary pressures may persist in some sectors due to high logistics costs and seasonal demand ahead of the festive period. The overall outlook suggests a mild but steady slowdown in consumer price and induction of a potential turning point in Nigeria's inflation easing cycle. According to research, the coming festive season could temporarily slow this inflation as demand for food, clothing, and transport typically raises in Ember months. Despite the Central Bank of Nigeria's tight policy stands with the monetary policy rate at 27%, higher logistics costs and imported inflation could keep price pressure sticky. A broad-based price drop still appears unlikely until exchange rate gains and supply improvement becomes more sustained. Since stability in the exchange rate and energy market was maintained, September could mark the 6th consecutive month of easing inflation. The ongoing naira appreciation and improved FX liquidity are encouraging, both their impact on consumer price as has not reflected due to lag effectiveness in price adjustment. Moreover, food inflation remains the most stubborn component of Nigerian CPI, and although the harvest season offers relief, high logistic costs continue to limit the benefit to the end consumer. The festive season could also drive temporary spike in demand for essentials, particularly in food and transport categories in the coming months. Highlight several factors likely to contribute to easing inflation in September 2025 are a stronger naira performance. The naira appreciated across both official and parallel markets, averaging 1,498 naira to 1,550 naira in the month of September, compared to 1,535 naira to 1,650 naira in August as well. This relative stability in the foreign exchange market is expected to reduce imported inflation, especially for goods dependent on international supply chains, improved food supply from the harvest season in September. So now September considered with the peak of main harvest season, which has boosted the supply of key staples like maize, yam, rice, millet, and sorghum increase. Agricultural outputs typically softens price and food prices, easing the burden on consumers. Now, there have been some concerns within the slide because a major driver of Nigerian inflation now has been food. And then food now is something individuals can't do without. Another thing that is driving Nigerian inflation again is cost of logistics. The Ember month is around the corner. And now Dangote and Pengasyn are having their concerns over, Dangote refinery not meeting up with the demands of those Pengasyns and the drivers. So now there's a concern now going on within those sectors. Food has always been the major driver of every nation's inflation. And then since COVID-19, there've been climate change, and the globe generally has been suffering shortage of food. But now a lot of countries are bouncing back and coming out from that. But now let's bring it back to Nigeria. Nigeria don't get to produce most of the things that they consume. Yes, lots of importation happens, and that also drives inflation higher. Now, the moment we get to produce more and then farm more, then and also export what we produce, then there's a high chance that inflation will be curbed. When the rebasing happened earlier this year, the rebasing of the CPI, Consumer Price Index, happened to, a couple of years back, we witnessed a bit of stability. That was one of the major driving force of the inflation drop that we're seeing from 30+% to around 22+% as we speak now. Now, we are expected to see more inflation being lowered, but another concern is the harvest season is here. There's a very, very big concern with the fact that Pengetin and Dangote refinery is having issues. Now we're beginning to see fuel queues in the capital. We don't know about other parts of the country, but speaking here in Abuja, there's a couple of queues that we're seeing in petrol station, which is also going to increase and inflate the food price in the market, because farmers would find it difficult to transport their goods from their farmland to the marketplaces. Now, that already automatically is going to inflate the price. And now we are hearing that the cost of fuel here in Abuja in NNPC is around 995 naira, which will also triple the effect on cost of logistics. And then when this effect happens and then drivers get to increase their prices, then those also who farmed their products will increase the price so that they'll also make profit. And then when it hits the market woman will also increase the price, and then buyers now there'll be a whole lot of, you all can see the trajectory of how all of these things keep going. Now, if we do not find the stability within the petroleum sector, then we'll keep going back and forth with inflation costs back and forth like that. But we'll be going on a very quick break, and then when we return back, this conversation continues with Germany's inflation as it climbs 2.4%. Stay with us, we'll be right back. We will just have to continue based on some technicalities. So, Germany's inflation climbs to 2.4%, fastest pace this year. Looking at it now, Germany's consumer price inflation rose to 2.4% in the month of September, marking the continuous and up from 2.2% in August, according to reports. On a monthly base, price rose to 0.2%. Up from 0.1% in the month of August. For market participants, the data confirmed that inflation has slowed down, keeping the cautious on rate adjustment as core pressure remains evaluated. Investors continue to weigh the near-term scenario for monetary policy, as any shift may influence the price of assets. And then looking at this concerns now, Germany's inflation has climbed to 2.4%, fastest pace this year. Now, all of this is also looking towards the financial sector, almost like what is happening in Nigeria. And they're not having concerns around food and all of that, but they are having concerns around the financial sector, which Nigeria is trying to find stability around. So if they get to find their stability, I think their inflation is also going to be curbed down and be stabilized. So moving on now, UK unemployment hit 4.8%, highest since 2021. Wage growth still firm. That means they're not having concerns within their financial sector. The United Kingdom unemployment rate climbed to 4.8% in 3 months to August, slightly above 4.7% consensus, and marking the highest level since mid-2021. According to the Office of the National Statistics, average earnings include bonuses increased by 5.0% year-on-year, outpacing the consensus of 4.7%, underscoring persistent wage pressure despite a cooling job market in the world's 6th largest economy. Overall, the combination of higher joblessness and sticky pay growth complicates the Bank of England's policy outlook, driving slight weakness in the pound sterling, while traders mourn the timing of rate cuts. Investors are looking for signs of any shift around monetary policy that may influence segments towards the risk assessment, including cryptocurrency. Bitcoin earlier today sold at $112,000 US, and we've seen projection that says before the close of business this year, Bitcoin is looking to hit around 120 to 130,000 US dollars. So we are going to see how all of that pans out. So looking at the monetary policy rate in UK now, investors are looking for a swift shift where they can be able to navigate and also look for signs for a very quick bull run. So this whole inflation concern, unemployment and all is something that is affecting the entire globe. But still, we will see what IMF will say in line with Nigeria's economy, as the press briefing will be happening today, and also we will see what the future looks for the global economy and also Nigeria at large. This is how much time will permit us to take on today's edition of Business Points. My name is Samuel Odi. I'm sitting in for Kikelomo Okere. In her words, I celebrate you all. Bye for now.